We're in for a nice discussion again with another panel, this time focused on risk management and the future of disaster programs. We've been talking about a lot in several different aspects during the course of today, and I'm really pleased to have this panel with me to discuss these topics. Starting out on my left is Tom Zacharias, who is the president of National Crop Insurance Services, followed by Zippy Duvall, the president of American Farm Bureau Federation, Nicole Berg, who's the new president of the National Association of Wheat Growers, and Kam Quarles, who is with the CEO of the National Potato Council and also representing the Specialty Crop Coalition. So thank you for all of our panelists to be with us this afternoon. We were talking about not only the importance of risk management, as many of you know through the commodity title, and having a farm safety net, but more importantly, what so many of people have said is the core of the safety net for farmers, and that is crop insurance. But more and more people are also talking about permanent disaster. And I thought it would be important to start out with Tom, you sharing a little bit about the history, because unfortunately, I'm sure older than you, Tom, but no I do remember that, when I started my career in 1980 as a journalist, that we had a lot of folks who were relying on ad hoc disaster, and they were waiting for it for quite some time because it didn't arrive on a timely basis like crop insurance does today. So maybe start us out by sharing a little of the history of how we've gotten from those early days of crop insurance and ad hoc disaster to where we are now.
Okay, well, there's no way that you're older than me, because that's not going to happen here, okay? So let's get the record straight there. I would say your observation on time with 1980, I looked up 1980, and I found that disco was done by 1980. So no more disco, okay? We're not going to do that. All right, seriously, though. Let's look at where crop insurance is, and then we'll go back to where it was, and then we'll go forward. How's that? We'll do it this way. All right. Currently, National Crop Insurance Services, our members are the 13 companies that are writing this business in the U.S. today. And that business last year was about $13.5 billion in premium on the crop side, about 560 some odd billion on the livestock side. That represents about 450 million acres on the crop side, okay? And this is done through the network of the crop insurance companies, their agents and adjusters. Agency force, Tom Sells out in the audience, is about 14,000 adjusters throughout the agents, and then about 5,000 adjusters, and roughly 2,500 company people. So the network of crop insurance today is about 2,400 people nationwide in the U.S. Okay, that's sort of where we are. Sarah's question of how did we get there? Well, we should have brought Keith Collins for this, because he does it so much better than I do with the emphaticness of Dr. Collins. Anyway, the private sector begins with USDA back in the early 80s, was the major introduction there. Although private companies have written this stuff for quite a long time, there's been private hail business for over 100 years. We got companies that have been in the business for over 100 years. And for some of us, for me, it seems like over 100. Anyway, moving on. So fast forward to 1993, if you remember the excessive moisture conditions and the flooding in the Midwest, that poor metaphor here, but that precipitated the 1994 Crop Insurance Reform Act. There was a big jump in participation with respect to that legislation. Fast forward a few more years, the introduction of the revenue coverages and also the increase in premium support so that it made crop insurance more affordable. So if you take that up into the early 2000s, that really set the stage for, quote unquote, the modern crop insurance program. 2014 and 2018 were both farm bills that moved crop insurance in a direction of maintaining and strengthening, okay, and other provisions put in those bills with regard to specialty crops, expansion of coverage, et cetera. So that's sort of where we got to where we are. Going forward, my sense of this discussion is there are things that have enabled crop insurance and risk management to be successful. There's aspects of the program. It's, I'll use the Latin that I don't know, ex ante term of crop insurance is before the fact. Farmers know the liability, they know the coverage, they know that if a certain loss takes place, when they'll get paid, how much they get paid. These claims are turned around in 30 days in most instances, so there's predictability, okay, with crop insurance. There's also cost sharing. Zippy, your folks at American Farm Bureau just did a piece looking at sort of the deductible losses and how much loss farmers absorb there. Farmers pay premium for federal crop insurance in the amount of maybe $4 billion, depending upon commodity prices, okay? They share in the costs through those deductibles. They absorb those losses. Private companies, the folks I work for, sharing in the loss. They also have IT infrastructure, office support, et cetera, and the federal dollars, the taxpayers. So everybody has a role in sharing the costs and risks and risk management as we go forward today. And I think that aspect of it, the predictability, crop insurance is adaptable. Made lots of changes over the years. So those types of things as we go forward, are we going to make those investments to make sure that we can continue to do those types of things for risk management for the U.S. farmer?
That's a great overview. Zippy, your organization has a grassroots policy process, so we literally start at the county level up to the state and go up to the national, and we've been privileged to cover a lot of your national meetings. Tell us how your organization has evolved when it comes to looking at not only crop insurance, but some new innovative products for dairy and the role that risk management has played for your members.
Sure. Well, Tom gave us a great history of what crop insurance has come from to what it is now. And we do have a very thorough policy development process that brings ideas from the farm and from the barn and from the fields to our policy, and then we help push policies forward in Washington, D.C., or even our state houses to be beneficial to farmers. Over the years, over the last 3 or 4 decades, our approach to crop insurance has not changed a lot, but just like Congress, as our perspectives changed as to how we develop those risk management tools, we have changed along with that. Our farmers come in, and I see Mary Kay Thatcher out in the audience, and Mary Kay kind of led our charge for many, many years in Farm Bill and around crop insurance, and she's due a lot of credit for where we've come from in our organization to get that done. Since Mary Kay has left and went on to greener pastures to have a good time somewhere else, we've handled a little bit different. We have a Farm Bill working group now that will bring in representatives from all 50 states. We look at the current Farm Bill to see how it's performing, try to find what might need to be tweaked in it, and then we move forward in the policy arena to try to push those tweaks forward to make positive things happen with it. Since I've been in farming, and I've been in farming since 1976 as an adult, and then with my own responsibilities, which I was raised there too, and worked real hard as a child coming up in the dairy business. But back then, when I went in as an adult, really crop insurance was, like you said, it was about maybe delayed planning, preventive planning, or something catastrophic happened where it was a drought or what it might be. And it's come such a long ways, and now we talk about covering our yields, covering revenue, covering many different directions, and also different crops. So it started out mainly row crop. Now we talk about pasture coverage, we talk about forage coverage, and we've seen it expand and adapt to what agriculture really needs this day and time. So to take a program that was important to be there and make it more of a piece of what we do each and every day in risk management has been crucial to the sustainability of family farms and agriculture. So we've heard the call from our farmers. Back, you referenced a new program. through our working group, dairy working group, to find some risk management tool to better help the dairy industry, and we came up with the Dairy Revenue Protection Program. John Newton played a big role in that, and we partnered with other companies. Of course, John's over with Senator Bozeman now, but he did tremendous work there in developing that product with others helping him, and that's become a huge piece of the risk management tool that our dairy farmers are using all across America. And now, since that's been so successful, we're hearing from our beef farmers and our pork farmers and our poultry farmers, can we do something similar in those areas? And I think if we look back over the history that was just talked to us about, and how has adopted to a modern day agriculture, one of the links is getting farmers to adapt to using it. I was a dairy farmer. I never bought any kind of crop insurance at all. Now they're buying it. And it took forever for dairymen to realize, hey, this is a risk and I need to manage it. And you look at all other kinds of agriculture, especially smaller farms, organic, and other areas, they're just not familiar with it. And so they don't really know. So I think outreach needs to be better. And it has become tremendously complicated. Tremendously complicated. Takes a lot of time, and farmers don't have a whole lot of time, and they don't have a whole lot of time to study it. So we depend on other people to help get us there to make sure that we'll cover our risk in that area. So as we move forward, I think we need to continue to look and see how we can improve the program, but make it less complicated on our farmers, and make sure that we do the outreach to allow everyone to take advantage of it.
Well, you're absolutely right. There are a lot of different options you can look at whenever you're trying to buy insurance. And Nicole, you have a unique advantage point in that not only are you president of NAWG, you serve on the Federal Crop Insurance Committee Board, and you live in an area in Washington that is very arid. So you don't have a lot of margin for error here. Talk to us a little bit about, not only from your own personal perspective, but from NAWG's perspective on what you're looking at in terms of future risk management.
Well, first, thank you, Sarah, for inviting me. I'm a little bit different than Zippy. I've had crop insurance my whole life, and I admit it. But I farm with my dad and my two brothers in what's called the driest area in the world that grows cereal grains. And so I have a picture for everybody to see, just to kind of, let's get a perspective. Sometimes we get so far deep into the policy part of things, we kind of forget about a perspective of what does it look like. And so you'll see up there, there's 2021, which was last year. I only harvested a third of our farm, and the rest, it was crop insurance. And I'll have to say, I can honestly say, I would not be sitting here if it was not for crop insurance, because of how arid it is. And our business plan is about a 10-year business plan in the area where I grow, and in a lot of areas that are arid across the U.S. In that 10 years, I suspect I will lose money, even with crop insurance. I will lose money probably 3 of those 10 years. And so it's something that we really have to plan for as a risk management tool. As everybody knows, these input costs are coming at us, fuel prices, fertilizer prices, and I know that Congress wanted to create a safety net for us farmers to, number one, stay in business, and we're price takers. And so with all that coming at us, and now we got these high input prices, I kind of see our safety net having these big gaping holes in it. They probably wouldn't even catch a fish, because we're not getting enough return, and all farmers want to do is stay in business another year. Last Farm Bill, NAWG worked on what we call quality, what is it called? Quality loss option. And that was one of the things that was important when we had a quality loss that affected our APH. And so I looked at that as a real win for the industry with regard to new tools in the toolbox, especially in different areas that have different issues. And so I do encourage everybody in this next Farm Bill, just as NAWG's doing, we're starting to put together our priorities. Let's have some out-of-the-box thinking on this next Farm Bill. Is margin coverage maybe something we need to start having a conversation? When you have the wheat prices are obviously high, but My fertilizers doubled and tripled. And also, look at fuel. When you all fill your gas tank and I'm filling a tractor, just think about it, add a couple zeros on there. So yeah, it's hard out in the countryside right now. And so I do think that in the next Farm Bill, we definitely need to talk about making our safety net with a little bit smaller holes.
Thanks. Kam, crop insurance is something that a lot of folks in row crop areas are very familiar with, but not so much for the potato industry or especially specialty crops in general. Talk to us a little bit about how that has changed perhaps in more recent years and what you might still see as some of the gaps.
Sure. Thanks for having me, Sarah. I was thinking back to 20 some odd years ago when I started this. I'm proud. There's not a specialty crop person sitting on this panel. I mean, that's what really would have been the change. There were relatively few of our. When you look at the Specialty Crop Farm Bill Alliance was formed about 20 years ago to try to come up with a unified set of policies that's going to cover all of the 300 or so commodities that fall under that specialty crop banner, and it's not easy to come up with that unified set of policies. A relatively few of us were really focused on crop insurance at that time, but with each successive farm bill, I think we've driven forward, and the specialty crop community has gotten more warm to crop insurance. One of the challenges, I think the big one for us going forward, and this might meld kind of the disaster disaster discussion along with specialty crops, or with crop insurance, is 2 years ago when COVID hit. I thought this was kind of remarkable. When COVID hit and USDA had to respond with very rapidly with a direct payment program, the first version of CFAP came out, and that, when it rolled out, specialty crops were effectively not part of CFAP. They were just kind of left off the list. And it wasn't USDA's fault. The problem was a lack of data. You had all of these commodities that were heavily food service facing and comprised 50% or more of all U.S. farm gate value. And the data that was coming into USDA, it didn't reflect any type of price decline from shuttering all of our food service, restaurants, hotels, all of the various federal feeding programs, all of that was shut off overnight, institutional buying. And it was remarkable to us because we were seeing a catastrophe for the potato industry and across specialty crops. But what we didn't have that our program crop brethren had was there's no futures market surrounding specialty crops. So where you can see on kind of a second by second basis where wheat is, where all those various commodities are, specialty crops are just a blind spot for USDA. And so we had to go back in after CFAP rolled out and try to recreate that economic data to make that case to USDA about how bad the impact was for specialty crops. And fortunately, we were able to do that. But that was an ad hoc circumstance. When you think forward, this goes back into Tom's bucket, is that lack of data still constrains USDA when you're trying to construct an ongoing crop insurance program to cover a variety of diverse commodities, 300 different commodities, all grown a little bit different way. It's incredibly tricky to do that. It has an impact on how those products are priced, how they're constructed. And so I think that's an ongoing burden. It's not to dump all of the blame on USDA, far from it. I think it's an ongoing discussion as we look at this farm bill. How do we sit down with USDA and the industry, develop better data that will make more affordable, useful products for an already underserved part of, and that delta is closing for specialty crops, but it's still a pretty big delta overall. So I think that's our challenge going forward.
Just to follow up on that, I know when we had talked earlier a little bit about there were some early cases of crop insurance for certain crops like watermelons that kind of left a bad taste in the mouth of some in the industry. Not that anything against watermelon, because it's a really good crop, but can you share a little background on that?
Yeah, and this goes back, you remember it, Sarah, it goes back a number of years, but some early version, I think it's likely a data problem in part, but some early versions of various programs impacting watermelons, some other annually planted crops, essentially encouraged overproduction. It massively distorted the market for a year or a couple of years, and the damage caused to producers over that time caused a real chilling effect across all of specialty crops. Those things, even though it's been decades now, it still hangs in the mind of producers and has caused them to resist that, resist getting into crop insurance, probably makes them overly sensitive to crop insurance. Now, I grew up in the citrus industry, so you'd have to be pretty galaxy brained to be able to figure out how to distort markets for when you're going to plant a tree and it's about 5 or 7 years before you actually have a marketable crop. It doesn't really work that way for the tree crops, but for the annually planted side of the house, that is, in theory, it's a realistic concern. And I think RMA has taken that seriously. Certainly our industry has taken that seriously. And we're dedicated to ensuring that that doesn't happen going forward. But missing that history, if you don't have that history, it's confusing why that delta, that contributes in part to that delta, I would say.
So I see some questions are starting to come in on Slido. Please feel free to send in any of yours, because as a journalist, I can sit up here and keep asking questions on my own if you don't participate. But one of the ones that has come in so far is talking about how the federal crop insurance program accounts for future climate risks. And I think this is something that, and without getting too far in the weeds, Tom, I think this is for you to talk about the actuarial soundness of the program.
Yeah, it would be nice to the official RMA actuarial person here, but I'll do the best I can. Okay, so crop insurance rating is based on the losses and exposures that we've observed over time. RMA within the past, 8 to 10 years, maybe even a little further back, has made changes to their rating methodology to make it more responsive so that it is reflective of, a more current expected value of the expected losses in the program. Right now, the actuarial performance has been very good over the past 10 to 15 years with respect to crop insurance. So are there always things that can be tweaked and improved? Absolutely. But the rating system has been tweaked and modified over time to better adopt for the risks coming forward.
So for both Zippy and Nicole, have your organizations had some discussions about changes you'd like to see to address climate
Through crop insurance?
through crop insurance?
Well, we think there's two different subjects. We'd like to deal with climate issues, and they be driven by voluntary market-based incentive programs, just like conservation programs have been delivered. So we haven't had those conversations. Right now, we do not have policy that would support that.
Nicole?
Yeah, we're about the same. We're in the process of developing our farm bill policies coming up. I will talk on an FCIC board basis. I do have another hat I can wear. One of the things that came out through the Corn Growers Association was what was called PACE. And it's where it's a split fertilization method with regard to corn. And so that was one of the ways that I felt RMA and at least my board of directors thought it was a way to dip our toe in the water to kind of see how does it work when you start getting into farming practices. RMA does a great job with yield. It does a great job with price. But when you start getting into the kind of these gray areas, it's very difficult to quantify as well as measure. And so we're all watching it very, very closely on the FCIC board to see where it goes in the future.
So Kam, one of the things that I remember working with Russ Redding early on when he was at the department and an interest in doing more for specialty crops, which became AGR and AGR Light, and now most commonly known as Whole Farm. So there's been a lot of adjustments made in whole farm revenue insurance to try to address the needs of not only specialty crop folks, but diversified farms that have both crops and livestock. Some people will say that is a great, climate solution in itself, and that you have this diversification in risk management. But it's still not very popular. So what are we missing that needs to still change in whole farm in order to make it attractive for the specialty crop industry?
You're absolutely right. The whole farm has helped to start to close that gap. I'll just give you a sense of what the gap is. So roughly $90 billion a year in specialty crops are planted in the United States, and about 20 billion-ish of those specialty crops are covered by crop insurance. So it's still the delta. I mean, it's not small, but it has been closing, and that's a positive. Whole farm, I think, is to a large degree. It was the ability for the industry as well as RMA to jump over all the complexities of 300 individual commodities. The challenge I hear more often on whole farm than anything else is affordability. Is how do I, farmers obviously they're making a cost-benefit analysis every single year, and is that premium worth it for what I'm getting back? In some cases, in an increasing number of cases, it is, but I think that affordability question is the one that needs to get answered going forward.
Go ahead.
And another issue with whole farm, because the policy is attempting to cover multiple crops, et cetera, there is a level of complexity associated with it. So we've heard this, and it was in the hearing last week about complexity with these programs. Zippy brought it up, so there needs to be efforts to, better streamline these things. Price is an aspect of that, trying to find the right prices to work for whole farm. So these are things that goes back to the issue of data collection and having enough information to write these kinds of policies successfully.
So what does that look like? Do we need to have USDA tracking in a better way? Can there be a private-public partnership in order to getting the data that's needed to make these decisions? Kam, can you start with that?
Yeah, I'll try. And it's truly a multi-billion-dollar question that we, in the specialty crop industry, don't have an answer to right now. It's one of our biggest charges for this farm bill, and likely a number of years beyond that. Clearly, it's the industry, depending on who you are. You're just look at the potato industry. You've got parts of the industry are selling on a contract basis. Part of it are selling purely on the spot market into retail. Every one of those producers is going to have different motivations in sharing data. There's obviously a number of proprietary issues there. How to get to that? How to enable USDA to see beyond some of those complexities to get down to price it's a huge challenge. I don't know that we have that answer across all of those commodities. It's going to be truly an ongoing challenge.
Tom, you got some thoughts on that, or Zippy?
Well, I have thoughts, but it's not 5 o'clock yet. But so I'll say something stupid in between. Well, if you look at the 2018 Farm Bill, and this is a mechanism, the specialty crop initiatives put in by RMA, where they have a specialty crop liaison at the different regional offices. So it doesn't, solve this problem tomorrow, but the infrastructure that's being put in place, Nicole mentioned the 508H process, there's avenues to get at these issues and try to find a risk management solution. And it's going to take time.
So we still do continue to hear calls, especially after a major weather event like a hurricane or, huge problems with a drought or, the derecho that went across Iowa and parts of Illinois. We hear calls for some sort of an additional disaster program, whether it be, we have WIP and we have WIP Plus, but is there a need for something more, or do we just need to keep triggering current crop insurance programs, having more pilots that fill in some of these gaps? So Nicole, do you have any thoughts on where we might go with this balance of having some sorts of disaster programs and crop insurance, or does it need to all move to crop insurance? What do you see as a future?
Well, if I could see the future, I wouldn't be sitting here probably, but with regard to the future in crop insurance, farmers across the country, they appreciate the extra help with the disaster payments because they are in a time of need, but they have like a bit of heartburn because it usually comes about a year after the disaster, and they're already into their next year cropping cycle and their next year expenses. And so we talked about predictability of the payment. I think farmers would be leaning more towards the predictability of a payment. And I talked earlier about my safety net. I need to have a smaller hold safety net to make sure I can cover that risk assessment. I always do a cost analysis of it and say, okay, how many more bushels do I need to lose? And then how much is my premium? And if I say, oh, if I can't, let's just say it's 5 bushels, but my premium is more than the 5 bushels, I might stay at a different level. But you want to cover your costs, and then you're starting to go into these high input prices. So I definitely think it needs to be a big topic of conversation. Farm Bill was our #1 priority at the wheat growers during the last Farm Bill. We haven't gone through those priorities yet, but I suspect it will be very high up on top, if not #1.
So Zippy, what are you hearing from your members about permanent disaster?
Well, if you go across the country, a lot of farmers think there needs to be some permanent disaster. Our policy really doesn't support that right now. The pros of it is that it would make money available, and it would be timely. We've already heard on the panel here to say, sometimes it's 2 years down the road before ad hoc disaster program will get money to farmers. By that time, some of them's out of business and lost their farms, especially in the hurricane areas where it tears up their buildings and everything else. And so we don't have a clue what it might cost, and how much money would you put there. So we'd rather take the crop insurance risk programs that we have, expand them, answers the problems that Kam and them have, expand it to every area of agriculture, and give them a way to do risk management planning with the insurance that way. We think that would be a better way at this point in time.
Did you want to add to that?
Amen. Oh, that's
So one of the other things that we've heard a lot about, and RMA has come out with this already, is having a premium reduction, a premium benefit, I guess is the proper terminology, for people who are planting cover crops. That's great if you are in an area that's got 33 inches of moisture and you're able to get in and plant the cover crops. I shared with some people that when I bought my farm in 2019, the first year when I cash rented, my young renter flew on the cover crop seed, and it didn't rain for 3 weeks. So the cover crop that I was able to look at was probably about as big as this instead of 300 acres of cover crops. So it doesn't work in all areas. Nicole, you know that.
Oh, yes.
And yet we have these programs. We have Iowa, Illinois, Indiana. They're also matching the RMA program on cover crops. So how do we make these supposedly climate smart practices, how do we reflect those in crop insurance and make it fair for people like those in your members in the wheat industry?
Yeah, thank you, Sarah, for that question. That's one of the things at the forefront of wheat growers across the U.S., especially when 70% of wheat grown in the U.S. is a winter wheat, which is planted in the fall. So you plant in the fall, and then you go through, and so we do have a cover. We just happen to harvest the cover. And so how do we get credit for the good work we're doing? We did just have a meeting with FSA, and we'll probably meet with RMA and have those conversations. I think it just needs to open up the conversations of whether it's the drier, arid areas that we have to save the moisture. We just can't grow a cover crop. And so then you got that, and then you got the winter wheat that goes over fallow in a year. You just won't grow a cover crop. So, it's kind of difficult to punish people who are actually doing conservation because they don't fit in a box.
Are any of the rest of you hearing some other sort of linkages that are emerging? You know, we've had conservation compliance that has been built into crop insurance in the Farm Bill. Some folks are talking about other things that, can we nail down environmental outcomes and link those to crop insurance? Any of you want to discuss that?
You mentioned conservation compliance, and this was an interesting evolution for specialty crops, in that conservation compliance is, if you're in the program crop world at the time that mandate was pushed forward on crop insurance, I mean, you were probably already involved in it. You knew how to operate within the programs. Specialty crops, that was largely completely foreign. At the time, I was representing some folks down in Florida, and they said, look, I mean, if I pick up a rock and throw it in 20 yards in any direction, I'm probably going to hit a wetland. And I mean, we've just never been part of, if a lot of our producers, if you ask them what NRCS stands for, they wouldn't know. And you know, it was just that disconnect between specialty crops and that side of USDA. We worked through that with them, and it's been a big evolution, and there's still some challenges out there, but to me, that was one of the examples of what appeared to be a relatively benign change in Farm Bill policy. You're just simply extending conservation compliance from one side to the other. It had a massive impact on folks who were doing nothing more than purchasing cat coverage. I mean, all of a sudden, they had an entire new suite of things to worry about that they were just completely out of their mind. Was something they never had to deal with before.
One of the other things that has come up in some of our discussions is that there is so much innovation right now in technology. There was a mention not only about the practices that are being supported by this PACE product, but you know, you've got companies like Pivot Bio that I know is in the room, and you've got other microbials, and you've got, you know, just these innovations that are coming much faster than we can probably even, you know, record on which ones are going to be successful over the long term. What thoughts do any of you have on how we might do a better job of developing more and more pilots to reflect some of these technological innovations? Don't all jump in at once here. Well, Nicole, you watch some of the things that are going on in the 508H world.
The 508H world is definitely, the majority of the information that comes across the desk is definitely specialty crops. I've learned more about kiwis and oysters and different things that you think of, oh yeah, that needs coverage. I can see where they need a safety net. And we are all agriculture, even if we are seafood or oysters. And so they have technologies as well that they're working on. How do you even see the oyster when it's underwater? And then how do you do an assessment of it? So I think that the crop insurance industry is definitely trying to implement the different technologies. I'm not sure they're there yet with regard to quantifying, you know, I think they know where they want to go and how to, but they're not sure how they're going to get there or how they're going to create that policy. So there's no moral risk to the policy.
Yeah, it's a tricky issue. Some of these coverage, if it was easy, it would have been done. Okay, there's the answer to that one. But the other side of technology and innovation is that's the return to risk from innovators and entrepreneurs. So trying to predict that from the standpoint of, oh, if we do something through 508H or this is part of the Farm Bill, then there's that element of entrepreneurship where if somebody builds a better mousetrap, they should be compensated and rewarded for it. And like Nicole said earlier, if we could predict some of that stuff, we wouldn't be sitting here, you know. So but I think going back to risk management and the future in terms of the groundwork is laid to make a lot of changes and move in the right direction on a lot of fronts. Will we get there to everybody's liking in terms of speed of delivery? No, probably not. But the fact that we've got the issues of actuarial soundness, program integrity, if we keep those, you know, as part of our lens when we look at this stuff, I think we'll end up in a better place down the trail.
Thanks, Tom. So as we wrap up here, I'd like to have each of you address this question, and we'll start with you, Kam. We've had a lot of congressional staff either in the room as well as watching online. We've got members still coming yet today. So if you had one piece of advice that you would like to offer to some of those lawmakers and staff as they look at risk management in the next Farm Bill, what would that be?
Ooh, wow. Well, with 300 different commodities under the Specialty Crop Farm Bill Alliance, I can pretty much say anything, and I'll probably be right and wrong. So I'm covered with all of this, so I don't feel that bad. I think and it's really an ongoing message beyond just crop insurance, is that specialty crops, the diverse nature of specialty crop production, which is tremendously valuable for the United States and really for the world, it's just different. And I think there does need to be some thoughtful reflection on all of the various policies impacting specialty crops about how unique they are from some of our program crop brethren. Doesn't make it, doesn't mean that there's a conflict there, but I think you do need to have some sensitivity to how these policy changes can impact commodities that they're stepping more into the forefront of the Farm Bill, but they're still, to some degree, kind of a little brother, if I can categorize them that way.
Nicole?
I guess what I would recommend is I have an open door policy at our farm, and I know a lot of farmers across the country that are wheat growers. We have open door policies. You know, we'd love to have you come drive combine, work harvest, get out on the land, kick some dirt, and just kind of have some windshield time with some farmers and ask people in your district, ask people in your state, how can I help? How can I make this safety net better? I think that's one of the best things we could do. Agriculture is a small population, but it takes all of us to help with a farm safety net. And so that's what my recommendation would be, is to get out and talk to farmers, and us farmers need to get out there and tell our story better.
Amen to that. So, first off, Sarah, great panels. I've enjoyed the day and really good conversation. I think we'll go back to I think it was Randy Russell said this morning, go back to the beginning of the Farm Bill and say the Farm Bill is something to the sort of, it helps support agriculture, which supports our national security. And I think that is a founding theory that the Farm Bill should be built off of, should continue. In saying that, our farmers say crop insurance is a cornerstone of the Farm Bill. Don't mess with it, just make it better. Fix the problems that we got in other areas. Let's let our farmers do risk management planning as we move forward. Then, let's want to make sure that we don't mess with Title I. Don't steal money out of Title I to go do something else with. If you're going to do climate, make it voluntary. Our conservation programs, EQIP, all those things that we've been as farmers voluntarily stepping out saying, yes, I will do that. Our farmers will do that when it comes to climate. We always have, we always will. It needs to be voluntary, incentive-based, market incentive-based. If you do that, we'll answer the call. In conservation, we answered a call of 140 million acres. That's the size of California and New York put together, that farmers have said, I will do that if that's what you want as a country. And I can protect our land and soil and water and natural resources on my land while I do it. They will do the same thing in climate. But don't steal from the cornerstone and don't steal from the commodity title, because that is what our farmers, that's their certainty there, and they need to have that certainty.
Last word's yours.
Okay. Well, first of all, after listening to Zippy talk, he and I need to get together, and I think we're going to form a consortium, a musical consortium called ZZ Crop, okay? So for what that's worth. All right, now the serious answer. Okay. Well, I would say go back and replay the discussion of Senator Roberts and Representative Peterson. Listen to folks that have done this a time or two before. As Nicole mentioned, the role of communication is key in all of this. And Kam is the next set of stuff, shouldn't say next set of stuff, but specialty crop interests and unique risks. Those are going to take a little longer, but sit down and get the players in the room and, try to build a better mousetrap.
And march forward. And yes, we will. We will be always continuing to improve. So, ladies and gentlemen, please thank our panelists for this discussion. So we have a scheduled break now, and at 3:30, Chairwoman Stabenow is expected to join us, so please be back in the room then. But first, we're going to have a video message from Farm Credit.
This is the America we all depend on. These are the farmers who help build it. And every day, Farm Credit is here, just as we've been for more than 100 years, supporting rural communities and agriculture with reliable, consistent credit and financial services. In good times and bad, we provide loans to America's farmers and ranchers, farmer-owned cooperatives, rural homebuyers, agribusinesses, and rural infrastructure providers. From spring thaw to first frost and all the weather in between, Farm Credit understands the challenges and rewards that come with farming. We help agricultural producers feed the world and rural economies thrive. Our infrastructure lending helps provide rural towns with access to clean water, modern telecommunications, and reliable energy, ensuring rural families and businesses have the resources they need to prosper. We're cooperatives, locally owned and governed by our customers. So our commitments go beyond finances. We are deeply engaged members of our communities, supporting local 4-H and FFA chapters, farmers markets, and community services for the future of America's farmers and the food they provide to families every day. Farm Credit will be there. Learn more today.